Ever feel like you're just swimming in financial news, but not really getting the full picture?
Yeah, it can be overwhelming.
Welcome to the deep dive. We try to cut through that noise, pull out the key stuff, and basically give you a shortcut to understanding what matters.
Exactly. And today, we're focusing squarely on Union Bank of India's recent financial performance.
Right. Our mission is to unpack their latest results.
We've gone through the official filings, the ones they submit to SEBI, that's the Securities and Exchange Board of India,
Mm-hmm.
plus the audited results, both standalone for the bank itself and consolidated for the whole group, and the audited reports, all that jazz.
All the official documents. So, okay, let's maybe start with the context. These numbers don't just appear, they're part of a regulatory process.
Absolutely. It's all done under the SEBI Listing Obligations and Disclosure Requirements, or LODR, from 2015.
And we're looking specifically at what? Regulations 32, 33, and 52 for these financials?
That's right. Those cover the results. And Regulation 54 was also mentioned for a security cover certificate, which, interestingly, was NIL as of March 31st, 2025.
Okay, NIL. And the bank's board signed off on all this.
Yep, they approved it on May 8th, 2025.
Got it. So what else is in this package of documents they submitted?
Well, you've got the core financial statements, of
Yep.
course, standalone and consolidated.
Right.
Then there's the statement of assets and liabilities, basically, what they own and owe at that specific date, March 31st.
A snapshot.
Exactly. And the statement of cash flows for the whole year, showing how money moved around. Crucially, you also get the independent auditor's reports.
The unbiased opinion.
Precisely. Plus declarations confirming things like no deviation in how they use money raised from shares or certain bonds, and that NIL security cover certificate we mentioned.
Okay. And any news for shareholders in all this?
Yes, actually, good news for them potentially. The board has recommended a dividend.
Oh,
It's 4.75 per equity share. That's for a share with a face value of 2 at 10 for the financial year 2024-25.
475. Nice. But it needs approval, right?
Oh, definitely. It's subject to the usual statutory approvals and, importantly, shareholder approval at the next AGM, the 23rd Annual General Meeting.
And they haven't set the date for that yet.
Not yet. The AGM date and the related book closure dates, they'll be announced later on.
Okay. And if people listening want to, see the original documents.
Good point. They're all up on the bank's website. The direct link is www.unionbankofindia.co.in English, financialresult.aspx.
Perfect. Right then, let's dig into the actual performance numbers. Starting with the standalone results, just the bank itself. Total income for the year ending March 31st, 2025.
It came in at 1,027,053,889 lakhs. Remember, a lakh is 100,000 rupees.
So we're talking nearly 1.28 trillion rupees. It's quite a number. How does that compare?
It's a decent jump from the previous year, which was 1,050,085,815 lakhs, so up from about 1.16 trillion.
Okay, solid growth year on year. And the last quarter, Q4.
For the quarter ending March 31st, 2025, total income was 33,025,431 lakhs. That's also up compared to the same quarter last year, which was 31,037,450 lakhs.
So the trend is positive both quarterly and annually, and that income mainly comes from interest, I assume.
Yeah, interest earned is the big chunk, as you'd expect from a bank, but their other income streams are significant too.
Right. It shows they're earning from different areas. Okay, income is up. What about the other side of the coin, expenses?
Total expenditure for the year ending March 31st, 2025 was 96,044,885 lakhs.
So around 0.96 trillion rupees, and that's also up compared to last year.
It is. The previous year was 87,064,752 lakhs. So expenses grew alongside income.
And the quarterly comparison.
Similar story. 25,055,416 lakhs for the last quarter, compared to 23,099,269 lakhs for the same quarter the year before.
What are the main components driving that spending increase?
Primarily interest expended, what they pay out on deposits and borrowings, and then operating expenses.
Which includes staff costs and all the running costs.
Exactly. Employee costs and other operating expenses fall under that. Rent, IT, admin.
Makes sense. Higher business activity often means higher costs. So income up, expenses up.
Yeah.
How does that net out? What's the bottom line? The profit.
Okay, the net profit from ordinary activities, after tax, for the full year ended March 31st, 2025, came in at 17,098,714 lakhs.
Wow. Okay. So nearly 180,000 crore rupees, or 1.8 trillion. That sounds pretty good. How does that compare?
It's a very strong increase. The previous year's net profit was 13,064,831 lakhs.
So a jump from roughly 1.36 trillion to almost 1.8 trillion rupees in annual profit, that's significant.
It really is. And the final quarter, ending March 31st, 2025, also showed a healthy profit of 4,098,492 lakhs.
Right, so profitability looks quite robust. Let's look at some key ratios now. They often tell a deeper story about financial health. Capital adequacy ratio, or CAR,
Very strong. As of March 31st, 2025, under Basel III rules, it stood at 18.02%.
18.02%. That's well above the regulatory minimums, isn't it?
Oh yes, comfortably above. It shows a good ability to absorb potential losses.
And the components of that, CET1.
The core equity tier 1 ratio, which is the highest quality capital, was 14.98%, and the additional tier 1 ratio was 1.26%. Both contribute to that strong overall CAR.
Okay. And we should probably mention the government holding.
Yes, the government of India holds a majority stake, 74.76% as of that date.
Right. How about earnings per share, EPS?
For the year ended March 31st, 2025, the basic and diluted EPS, before any extraordinary items, was 23.56 per share,
And that's
up from 18.95 the previous year, so reflecting that strong profit growth.
Makes sense. And overall net worth.
Also looking healthy, showing a solid base for the bank.
Okay, let's shift gears slightly. How does the bank break down its business? Segment reporting.
Right. They report across four main segments. You've got treasury that's managing investments, trading, that sort of thing.
Okay.
Then retail banking, serving us, individual customers. Corporate wholesale banking, which deals with the larger business clients. And then a category called other banking operations.
Four main buckets. Anything else notable there?
Yes. Interestingly, they now specifically call out digital banking as a subsegment within retail.
Ah, that shows the focus these days, doesn't it?
Absolutely. It highlights how important online and mobile channels have become. The reports give revenue and profit before tax for each segment, both quarterly and annually, for standalone and consolidated.
So you can see where the money's being made, essentially.
Exactly. You can see, for instance, how much treasury contributed versus retail and how profitable each segment is. There can be quite different trends in each.
Okay, good transparency. Now, you mentioned consolidated results earlier. What do those look like overall? They include subsidiaries, right?
Yes, the whole group. For the year ended March 31st, 2025, consolidated total income was 1,029,097,925 lakhs.
So slightly higher than standalone, as you'd expect, around 1.3 trillion rupees.
Up from 1,018,018,835 lakhs the previous year.
And consolidated net profit.
Also showing strong growth. 18,002,696 lakhs for the year, compared to 13,079,711 lakhs the year before.
Again, nearly 1.8 trillion rupees, slightly above the standalone figure, so the subsidiaries are contributing positively overall.
Seems so. The overall trends, both income and profit, look consistently strong, whether you look at just the bank or the whole group.
Okay. Now, usually in these reports, there are some important notes, footnotes, or disclosures. Anything we should highlight?
Yes. Definitely a few things worth mentioning. First off, there were revised RBI guidelines on how banks classify and value their investments. These kicked in from April 1st, 2024.
Right, new rules. Did they have much impact?
Quite a significant positive impact for Union Bank, actually. It led to a net increase in their reported income of 1,175.41 crore. That's over 11 billion rupees.
Wow, just from a rule change.
Well, it changes how certain things are valued and recognized. It also boosted their general reserve and their available for sale, or AFS reserve.
Interesting. So a regulatory tailwind, you could say? What else?
Another point involving the RBI. They allowed banks to reverse some provisions they'd made for potential losses on specific government-guaranteed security receipts, SRs, when these were transferred to ARCs, asset reinstruction companies.
Okay, dealing with potentially bad loans.
Exactly. And this reversal meant Union Bank could add a revaluation gain of 787.40 crore, almost 8 billion rupees directly to its profit and loss account.
Another nice boost to the bottom line from managing those assets.
Precisely.
All right. Anything else in the notes? What about risks like fraud?
Yes, they disclosed that too. For the year ended March 31st, 2025, they reported 282 fraud cases.
282. And the amount involved?
Quite substantial.
Oh.
4,598.71 crore. So nearly 46 billion rupees.
That's a big number. Have they accounted for that?
Yes. The key point is they state it's been fully provided for, meaning they've set aside funds to cover those potential losses. Within that total, 187 new cases worth about 885 crore were reported during the 24-25 financial year itself.
Okay, fully provided for is crucial still. Something to watch.
Yeah.
Any other points? MSMEs? Bad loans?
Yep, briefly.
Hmm.
They mention ongoing restructuring for MSME borrowers, following RBI guidelines, that's micro, small, and medium enterprises.
Supporting smaller businesses.
Right. They also reported transferring some non-performing loans, bad loans basically, to NRCL, the National Asset Reconstruction Company, and others. They give the amounts involved.
So, active management of stressed assets. What about their overall cushion for bad loans? The provision coverage ratio.
Very strong. As of March 31st, 2025, their PCR was 94.61%.
94.6%. That's high, right? Means they're well covered against potential loan losses.
Extremely well covered, yes. It provides a significant buffer. And just to reiterate the dividend news from earlier.
Ah, yes, the recommended 4.75 per share. Don't want to forget that.
Definitely not.
Okay, almost there. What did the auditors say overall? We mentioned their report earlier.
The independent auditors gave what's called an unmodified opinion on both the standalone and consolidated results.
Which is generally the good kind of opinion.
It is. It basically means they believe the financial statements give a true and fair view without any major qualifications or concerns.
Even though multiple auditors were involved for different branches?
Yes, they rely on each other's work for the overall opinion. They do note that a significant chunk of business loans deposits happened in branches that weren't individually audited for the year end.
But that didn't change their overall clean opinion.
Correct. It didn't lead to a modification of the opinion, suggesting their overall controls and consolidation processes were considered adequate.
Got it. And one last check, the money raised from shares or bonds, was it used as intended?
Yes. They filed an NIL statement for deviation or variation, so confirmation that the funds raised were used for the stated purposes during that last quarter.
Okay, NIL deviation, good. So let's try and wrap this up. What are the main takeaways from this deep dive into Union Bank's results?
Well, I think the headline is definitely strong performance for the year and the quarter ending March 31st, 2025.
Yeah, solid growth in income and particularly profit, both standalone and consolidated.
Right. Key health indicators like the capital adequacy ratio look very robust. That 18.02% is impressive.
And the provision coverage ratio over 94% also stands out.
Absolutely. They seem to be actively managing asset quality, dealing with stressed loans, and also benefiting from some positive regulatory shifts like those RBI guideline changes.
Anything particularly surprising or interesting that jumped out at you?
I think the sheer scale of the profit increase year on year is noteworthy. Also, the impact of those RBI guideline changes on income was quite significant, a reminder of how regulation shapes these numbers. And the dividend recommendation is solid news for shareholders.
Definitely. So for you listening, what stood out? Did anything here spark further questions about how banks operate in India, or maybe about reading these kinds of financial reports?
It's worth thinking beyond just these numbers, too. How might this performance reflect what's happening in the broader Indian economy? Is this growth a sign of wider expansion?
Or how does Union Bank stack up against its peers in what's a really dynamic banking sector right now? Lots to consider.
Indeed.
And if you do have specific questions for the bank, especially if you're an investor,
The email address provided is investor.relations@unionbankofindia.bank.
perfect. And as we always say, if you really want the nitty-gritty,
Go check out the source documents. They're on the bank's website. You can always dig deeper.
absolutely. Well, thanks for joining us on this deep dive into Union Bank of India.
Hope it was insightful.
Until next time, keep questioning, keep digging, keep learning.